Hello everyone, welcome back to my channel. Hope you guys had a good expiry today. And even I traded after a while today. I am finally getting better. And let's see, I hope I can maintain the daily trading scene in my life. But however, let's discuss the trade plan for tomorrow, and I'll also share what my trades look like today. So as always, to begin with, let's start with US 30. US 30, after we had decided, right, after we see a closing anywhere above 34,000, markets will turn bullish. And in any case, this red candle right now, the candle that was formed yesterday after FOMC minutes, this is not entirely a bullish hammer, but what's interesting is it's taken support from the exact breakout of the channel, right? So in any case, that's what we discussed earlier also. We cannot trust a breakout. If at all the markets kept moving ahead, it would probably fall even harder like that. So any kind of retest of a very strong important zone is very essential, and considering and being hopeful this is a retest, this probably could turn out to be a bullish rally, and our targets are almost 500 points away from here. However, the whole scenario changes. This whole move that you see right now, this whole move would be a bull trap. In any case, we start seeing a daily closing below these set levels, right? Below 33,650. If we start coming back below 33,650, if we see a daily closing below this, then the entire move is a bullish trap, and the markets will start moving down very quickly from here. So we have to wait in order to decide a bullish trend. Any daily closing above 34,200 is strongly bullish in nature. Then we have 300-400 points on the upside. Any bearish closing below 33,650 will result in a strong down move, which will take us all the way back until 33,170 or 33,000 also for that matter. So that's the plan for Dow Jones. So keep an eye out for today. Today could be an interesting day over there, and depending on how markets close today, we could see movement in our markets tomorrow. Coming to dollar. Now, one of the indices, right? It's either the US 30, whether this retest is an actual retest or this retest is an actual retest, right? One of them is going to fake out, and whichever fakes out, the other markets will turn into the opposite direction, and we'll see a bullish rally in that direction, right? Which one's a fake. So in any case, you start seeing a daily closing today below 102 point, say yesterday's low, 102.6. If we start seeing a daily closing today or tomorrow below 102.6, then definitely the US markets have broken out, and it's going to continue a bullish rally, and dollar will start to come down, eventually reflecting in our markets as well, and we could see a bullish rally. So today's price action in Nifty and Banknifty could potentially be expiry related. We will discuss that in detail. However, before we jump to our markets, Adi, this one's for you, bro. Like, since you might be trading S&P, so in that case, if at all you're trading, there's a very simple trade plan. And again, everyone else who is watching, even though you don't trade this index, you could always learn. Price action works similarly on almost all charts and scripts. So in that context, if you break it down to a 15-minute time frame, and 1 second, guys, something's not right here. Allow me to refresh. Yeah, so coming back to S&P, if we look at the 15-minute time frame, what we see is the markets have been supported by a long-term trend line on a 15-minute time frame, which starts from around the 25th of May. So anyone who's trying to trade S&P do have this on your 15-minute time frame. And what happened yesterday also is the markets did fall down, but it could also be looked at with another perspective, where it could be the gap fill, right? The gap the markets had left on Tuesday, this gap finally got filled, and also it coincides with the very important trend line that we're talking about, right? So anyone playing out intraday today, it's a very simple trade plan. Wait for the opening wherever the opening is, and if you see any 15-minute candle closing on either side, right? If buy open, if markets are already trading above 43.92, then yes, we could build new longs for targets of around 44.50, or 44.25 has medium resistance, so 44.25 and the final target being 44.50. And if at all the markets open slightly gap down or directly below, or see a 15-minute candle closing below 43.39, 43.38, then our first target is going to be the 200 EMA on 15, which is 43.18, followed by the psychological level of 4300. So it's a very simple trade plan in S&P, and I hope this helps. Anyway, moving to, let's start with Nifty. Coming to Nifty on a, let's just look at a weekly time frame because the week's about to end. What Nifty is forming on a daily time frame, yes, it is slightly negative in nature because there's a lot of selling from the higher levels, but also from the lower levels. If you see, we've come all the way from 560 and we're still trading at around 680, right? So we are just halfway. It's kind of a doji. It's better than a doji in the context that we opened down and we've crossed almost 120 points from the bottom. So anywhere we close somewhere here, these are all-time high zones, right? And if the markets had to strongly fall, after this long wick rejection, the markets would not even retest this. The markets would probably break this low and start tumbling down. So this is sideways to slightly bearish consolidation in Nifty, and Nifty is rather stronger than Bank Nifty right now. And even on a daily, if you look at Nifty, as far as we remain above 18,530, we are still bullish. We are consolidating sideways. We are doing a time-wise correction, slightly price-wise also. But as far as we remain above 18,530, we are not going to initiate any fresh short positional trades. Until then, you could hold on to your longs or exit and mine up losses and build new position if the market does trace down to 536, 520 levels, right? This is on a daily time frame. On an hourly time frame, Nifty is forming a very interesting pattern. And there's a lot to learn here, right? For whenever you're going to be trading later. You see this trend line that we have from the 19th of May, 10:15. It aligns with the 25th of May, further with the 12th of June, and finally today. And today we have closed exactly at the support, right? So, and this is an hourly time frame. We'll also break it down to a 15-minute time frame. But for an hourly, until you see a closing below 18,630, an hourly closing below 630, there's no intraday short trades. It's highly likely that if the global markets help and we could open slightly gap up and continue our journey up and start to cross the all-time high around 813, 820 levels. However, there's a slight bit of weakness. There's not a lot of strength in the market right now because a lot of sectors were also underperforming today. But in any case, as far as we are above 18,630 on an hourly time frame, there's no short trades. Below which there's 555 followed by 500. We have two targets on the short side. And let's discuss the long trades on a 15-minute time frame. On a 15-minute time frame, yeah. So basically, what happened in the last half an hour, right? This price action, I don't give a lot of heed to because it's a lot of positions being rolled over considering it's an expiry. So this breach, I don't entirely consider as a breach in any case. However, this could also be a retest with a 200 EMA on a 15-minute time frame, right? So for any short trades, there is no shorting until we see a opening directly below 18,630 or a closing 15-minute candle closing below 18,630. In that case, there's a small scalp that fills the gap for around 20 points, but the markets, I'm guessing, would not stop here because that would be the activation of a double top breakdown then. So below 18,630 on a 15-minute time frame, our first target is going to be somewhere around 18,570 followed by 555 and a final short target being 18,531. Now, in any case, the price opens anywhere between 18,665 and 18,719. It's absolutely non-tradable for an option buyer. The only long trades now that we could initiate are above 18,720. Above 18,720, we could initiate a fresh long for first target of 18,770. Followed by around 18,800 and 18,850. Somewhere between this, we could be booking our profits. But that only happens if we open directly above or see a 15-minute candle closing above 18,720. So that is Nifty. And moving to Bank Nifty, let's begin with a weekly time frame. In any case, right now, what's important here is we had discussed this earlier when we were analyzing multi-time frame, that the earliest around the 5th of December, the earliest all-time high closing on a weekly we saw was 43,633, right? So in any way, this bullish rally has to continue in Bank Nifty. Hopefully, we see a closing somewhere around or above 43,600 tomorrow. In any case, we close there, then the three red candles you see, this could be considered consolidation or price-wise or time-wise correction. But in any case, we close below 43,300. That could be very negative for our markets. And then the targets on short side are far away. There's minimum 400, 500 points for the first target, right, on a positional time frame. Again, when you look at 1 day, this support that you saw, that was giving the market support from 24th of April until yesterday, which was the 14th of June. That's 2 months of trading. That's a lot of time. Finally has broken down with the biggest, strongest candle, right? This is an engulfing candle that has encaptured around 5 days of price action, right? So that's really strong. And in any case, if someone wanted to carry overnights, even I wanted to, but I exit my position right before the market closed. The reason I'm not carrying overnights even as an option buyer is there's a high probability that markets would open gap down. Yes, I agree to that. But again, if you notice, this is a very strong support zone, right? So after one big candle, another exactly big candle breaking the support so easily, it is possible, but the probability of that happening is bleak to none. So that's why I'm not carrying any short positions. Now on a daily time frame, we could consolidate some spend maybe tomorrow over here and Monday start a fresh short journey. But tomorrow, all in all, as an option buyer, I don't see a lot of trend in the market. Maybe we might see a doji or a slightly small green candle around these zones. That's what I expect. But again, I could be wrong. So for easier understanding, let's just break it down to a smaller time frame, right? Let's move to 15 minutes. In the broader picture, what we see on a 15-minute time frame is, actually it's better understood in hourly time frame. If you look at an hourly time frame, right, we are at a very, very strong support zone right now where the market has taken support a multiple number of times, right, around these zones. This was the 12th of May, then around the 25th of May, and now today. So in any case, the three scenarios that we have, right, as far as we open anywhere between, 1 second, folks. Yeah, anywhere between 43,828 and 43,347, right? These two zones, this zone is absolutely non-tradable for an option buyer. And now the three scenarios that could happen, right? First, flat opening between these zones, we are not going to trade. A 15-minute candle breaching either side is the trade we are going to take and sit through it positionally, probably at least till the end of day, if not carrying it over to Monday. But in any case, we open gap up, right? Now that could be a fresh shorting opportunity because the structure of the market looks weak right now. And if the breakdown has to happen, allow me to show you how I visualize this. This, again, not very textbook, but if you bring it into perspective, this looks something like a double top breakdown with the neckline being right here, right? So we are at a very, very strong support make or break level. If these levels are gone, then we are going to see weakness for a small duration of days, not just intraday. So in any case, now the second scenario being if you open slightly gap up or even strongly gap up, and you see around the 15 minute 200 EMA and 828, right? Around the 700 to 830 zones, if we open slightly gap up and we see some weakness around this zone, I'll just mark it so you have it on your charts. This entire zone, right? This entire zone, if you see any negative red candle, any top wick rejection or any inverted hammer or any candle that shows you weakness, with the high of that candle, we are going to initiate a fresh short position with our first target being today's low, which is 43,400, below which 43,340, below which the target is far, far away. Then we get another almost 400, 500 points, and we could even carry our shorts over the weekend for Monday, right? In that case. Now, in any case, we open strongly gap down, right? If you open gap down, for example, say somewhere around 43,000, 43,100, then in that case, I would not recommend chasing the shorts. Do not short as the market opens. In that case, allow the market to come up, spend some time, show some rejection, and then eventually when it breaks down, around these zones is where we could initiate fresh shorts for the targets of 42,800 and below. And but until that happens, we have to give the market time to give us a setup. Do not chase a short trade after the market opens gap down. And in case of a gap up, we are going to initiate fresh shorts. That will be the best opportunity to create fresh shorts. But the entire game will change. In any case, the global markets turn out to be super bullish and we open directly above 43,820, 43,830, right? Then this last 1 hour, last 3 hours entire move will be a bear trap, and everyone who's short here will have to run for cover, and finally we will be again testing 44,200, 44,400, 500 levels, right? So these are the three scenarios that could play out in Banknifty. So I hope these levels help you out, and please plot them because they have helped me out today. And as far as my expiry is concerned, this is what my expiry looked like today. There were a couple of mistakes. I was very stupid at times, rather FOMO, because I was doing better than this. I had almost reached around 40k on intraday, but some of my mistakes led me here. But anyway, all in all, trading is a part of risk. I mean, risk is a part of trading, and I accept my losses as far as they are small. So, however, I hope this analysis helps you, and I wish you all the best for tomorrow's trading session. And all the best, guys. Hopefully I see you with another video tomorrow. And yes, I also had recommendations from some friends and folks about they were willing to trade equity also. So hopefully over the weekend I will come out with a equity video where I also discuss cash stocks and also FNO stocks where you could trade equity options. So watch out for that. That could be interesting for the coming week. And kindly do like, share, and subscribe to the channel. I'm really looking for this kind of validation where I know that people are benefiting from whatever I'm trying to help them out with my analysis. That really helps. And share it with people who might be in need of an analysis, who are new in the markets. And that's it for now. All the best, guys. Hopefully I see you tomorrow, right?